Well, it's been a very strong start to the year, firstly, Chris. Unlike many sort of Januaries where people are still at the beach, this year people have come back. They've decided they need to reshape their portfolios in the context of way lower cash rates than they've been used to in recent times. Where's that money going? We're seeing it ostensibly going into international equity exchange traded funds. So by way of example, 70% of every dollar going into ETFs this year has gone to international exchange traded funds. That's a marked change on prior years. If we look in prior years, typically it's been core domestic equity exposures that advisors have used in the ETF space. Increasingly, not just in exchange traded funds, but in all investment products, we're seeing a greater appreciation of the international equities and the role they can play in portfolios. And what's interesting again is that the way advisors are increasingly playing that international space is rather than look at a one big bucket world ex-Australia, increasingly look at where the opportunities are within that vast international equity market. Yeah, I think we're increasingly seeing an extension of the product set. So iShares has been in the Australian market for 5 years now and has really the leading franchise in international ETFs. And how those ETFs are being used is mainly, as I mentioned earlier, in very sort of specific ways. So rather than sort of just recreating the world in one or two trades, focusing on the US market, which despite its macroeconomic headwinds has a very strong corporate sector at the moment, and also emerging markets, where again uniquely iShares has a broad market emerging markets product. And if you look at the three sort of main asset gathering products in ETFs over the year to date, it's been the US, emerging markets, and global mega caps. So again, large capitalized companies, an easier way to get some access to that emerging market consumer, where these large cap stocks are selling their products into emerging markets, have proven some of the most popular ways to play the international market. Yeah, so I think it's a range of all of the above. I think in the main, what's influencing people's decisions and how they bring portfolios together, I think we can look at some of the cyclical issues and we can look at some of the structural issues. So specifically in the structural sense, we can see that, for example, emerging markets like China, Brazil and other parts of the world clearly are the greater growth opportunities for the next 10 years. And for a long-term investor, that's where they're starting to focus their attention. These countries tend to have fewer macroeconomic headwinds. So structurally, they're putting in place, better capital markets, better real infrastructure, etc. Whereas you look at countries like Japan, Europe, and to a lesser extent the US, they've got some macroeconomic headwinds, clearly too much debt, they've got an aging population, and investors are increasingly recognizing that divergence of global markets and global economies and starting to apply their investment dollar in a much more granular way than just taking a big bucket approach. Because exchange traded funds trade like any other share, the ability to be able to access share trading is a prerequisite for many advisors within the infrastructure that they use. What we have seen is that platforms have responded very well to this over the last few years as the ground-up demand for the modularity and the flexibility that ETFs offer has grown. So necessity has been the mother of invention there. Platforms have responded well, but also we can see advisors starting to use a range of alternative ways to access the markets, whether it's through online brokers, through different sets of different software systems that they have. But in essence, if they can trade shares on the ASX, then there's very few hurdles for them. And in fact, you have all the benefits of that intraday liquidity, the transparency of an ETF, which is really drawing them to that asset class. The one consistent theme is there is no consistent theme. So, and it will vary by asset class, it will vary by advisor. Oftentimes they'll use an exchange traded fund, for example, as the core of a portfolio. So if they have a client who has a particular desire to own single stocks, but they want to create a more efficient portfolio for the client to lower the cost to the client, then using an exchange traded fund as the core, and then satellites around the edge of that, a range of preferred domestic stocks. Or in the case of international, quite often what we see is that the ETF is used as the active satellite. So they may have a core allocation through a managed fund, but tilt the portfolio using iShares S&P 500 if they have a preference for the US, or tilt more greatly to emerging markets through IEM, the iShares Emerging Market product. And they can do that in a dynamic way, and when they see that the time is right to put that trade on or off, they've got the flexibility to do so. So there's no one set way of being used, and that's the great thing about the exchange traded fund. Every user of the fund pays the same price, whether they're a large institution or a small investor, and everybody uses them in different ways. I think the regulator has done a terrific job in Australia of learning from some of the challenges that some, particularly European markets, faced. But the reality is, in Australia, I think we have every confidence, and investors are reflecting that confidence, that we have a very simple, vanilla exchange-traded fund market here, which I do believe will grow in terms of consumer choice. We've seen that really over the last few years. The range of exchange-traded funds has grown enormously. And again, within international equities now, you've got 19 to 20 odd variations on that international theme, which gives you the modularity that investors are looking for. I think that will only continue to grow across asset classes and within asset classes, but I'm confident that investors will be able to remain confident that these products are easy and safe to use, and increasingly very, very heavily used by investors. So we've seen significant growth in the ETF category really over the last few years as a result. In the main, really the access that exchange-traded funds are offering investors has really been the key to their success. So for the first time, investors can access a whole range of markets outside of Australia with a simple click and a trade on the ASX. So what was once the domain of only large institutional investors to access diversified exposure to global markets, now advisors and individual investors can very easily gain access on the ASX to that world of opportunity out there.